I would
in on
absolutely
blockchain?
deny that. Yeah, not at all. I think blockchain is a marketing scam. I think that's basically something that crypto people use to pump their tokens. So again, standing on the shoulder of giants, but those giants being managers of some small crypto funds and some Twitter anons in many cases with small blogs and things like that. So when I came to it, what caught my attention in a big way was when they got close to Bitcoin. My company, Swan, is a Bitcoin financial services company, and we put out information and educational content about Bitcoin and sell Bitcoin and have, 10 or 11 products surrounding Bitcoin. So I pay attention when someone from the altcoin space starts, sort of sidling up to Bitcoin and doing kind of the Bitcoin affinity marketing thing. And that's when I'll actually pay attention and do some research. Otherwise, honestly, would have been just another, pretend Ethereum killer, whatever, who cares, another L1 doing their long run pump and dump thing. And but when they did the Bitcoin Reserve announcement and Do Kwon started showing up on Bitcoin podcasts and big Bitcoin Twitter handles tweeting out this is bullish for Bitcoin, whatever, I was like, I've literally never seen anybody in crypto do something bullish for Bitcoin. So I'm gonna at least go a click deeper and figure it out. So it was kind of late March, and finally, one weekend I sat down for 45 minutes, watched a couple YouTube videos, interviews basically of people that actually kind of knew what was going on there, and did some research. And really what crystallized it for me was just trying to figure out who benefited from this. And what specifically was the actual true Ponzi scheme dynamic at play in the Luna ecosystem was the Anchor protocol, and the fact that so the Luna company and Jump Capital kept on topping up this Anchor reserve, which was 20% interest for anyone that parked UST at Anchor. And trying to figure out why would they do that? They claimed it was for marketing, but they gave away $1.5 billion. That's enough to name a couple sports arenas and buy out the entire inventory of the Super Bowl. That's not good marketing spend. So what's really going on here? Well, they must be making more money another way. And the way that they were making more money is that this interest was actually a cheap bribe to get people to park UST in Anchor and make the UST market cap rise, because that fooled dumb fund managers and retail around the world into thinking that there was a vibrant ecosystem arising around Luna, of which there was nothing of the sort. All of their partnerships were pretty much fake or dated or just tiny, and there was really nothing going on other than this Ponzi scheme. And basically what was happening is the price of Luna was pumping and got up into $100 or something like that. And the Luna team, Do Kwon and their executives, and obviously their early VCs, were just dumping their Luna into this manufactured Ponzi scheme pump and dump. That's the other thing. So there was that. I'd say the second leg of the stool was, the crypto market peaked in November. And so if you're checking out CoinMarketCap or, I just log into Delta every few days and at least keep tabs on what's going on in crypto because it's adjacent to Bitcoin. And the only thing that was green and that was moving up the charts all winter was Luna. And then, I started out, some people know I actually started out in crypto. I spent almost a year in altcoins thinking that there was something going on there before I understood much more deeply the difference between Bitcoin and altcoins, and focused exclusively on Bitcoin since kind of early 2018. And, so I'm still in some of these groups with crypto fund managers and people who run prop trading desks and everything. And remember in March and go search for Luna in those chats. And even in December and January, it was referred to as the Luna Ponzi back then.
Yeah.
So insiders already knew. The Panteras of the world that made 100x, the Galaxies who profited from it, they actually knew that it was a Ponzi, long before some dumb people got caught holding the bag, unfortunately. Yeah, so there's not going to be a criminal case because, thank God, in the USA we have a tendency not to prosecute people for laws that aren't on the books yet. But I think there is a lot of exposure for the investors that pumped these things and marketed them, because in civil cases, all you have to prove is that it was reasonable to assume that something was a security. So if you basically used false marketing promises and didn't register the thing as a security, and a court reasonably sees that was a security, you actually do have civil plaintiffs and class actions that can go and pursue damages, but no jail time for any of the people that have been running these pump and dumps for the last 4 or 5 years.
Yeah, and there's a bunch of them out there. And I think the key here is, if you're watching our show, obviously the key thing we get into is a lot of deep dive interviews. So you guys are doing your own research and hopefully doing a lot more research, especially in these stages, whether you're all in on Bitcoin or you're doing some other projects out there. Cory, let's get into.
I want to just
go ahead.
Give kind of an analogy that I think is really helpful for understanding this moment in time. Sort of pre-regulation, when these crypto projects are able to just sort of like come up with a false promise of something that blockchain or crypto can do, which none of them have actually succeeded in doing, sort of adding real world value. It's all sort of like a snake chasing its tail, and it's kind of a reflexive levered market, speculation essentially for everything that doesn't have a use case as money, which is what Bitcoin is. And a good analogy for it is kind of online gambling in the aughts. So, call it from like 99 through 2006 or 7, when the government kind of chopped the head off of it. It was a really good place to make money for a lot of people while it was legal. And a lot of those people rolled profits into ad tech companies, and a lot of those ad tech people rolled their money into crypto. So a lot of the entrepreneurs in crypto or altcoins actually come from online gambling and ad tech, which have been kind of the places where you've been able to create sort of inventory and money schemes like just outside the reach of regulations by being kind of smart with data and kind of creating things out of thin air essentially, and finding a market while you can. But eventually these things get clamped down on, either by government or by market forces, or just by people waking up to the game afoot, right? And so I think essentially there's just this massive cash grab, because people that actually know what's going on in crypto know that these schemes are not long for this world, and they're just getting the money while they can, as long as the window is open, and as long as the government is sort of like ignoring the fact that there's a bunch of securities trading on Coinbase, which isn't registered as a securities exchange.
Right. Yeah. Okay. So, but you would not deny, when you look at blockchain in general, the technology of what blockchain represents is quite unique and different, at least in the potential of what it could mean for, internet use case, a lot of utility applications in the future.
I would absolutely deny that. Yeah, not at all. I think blockchain is a marketing scam. Yeah,
so you completely are out on the whole idea of where blockchain is going.
Blockchain has been around for 40 years. Any use case that people have tried to apply it, it's just a slow, expensive database. So far, the only use case for blockchain so far that's of any value is as part of the system designed for Bitcoin. So basically saying like, let's take the underlying technology and do something with it is like removing an airplane wing and thinking that that's something that has to do with, flying the airplane. But you take the other systems involved with flying the airplane away, all you have is basically like a long dining room table or something. You just got an airplane wing. So that's what blockchain is. So as an example, Fidelity, had a whole team from like 2015 to 2019 or something like that, trying to find use cases for blockchain technology. They did something like 50 proofs of concept, trying to look for anything to possibly do with Ethereum or anything else. 0 for 50, nothing, shut it down. Like there's just no use for it. And obviously there's some of the biggest Bitcoin components out there.
Yeah, for sure. Well, and I think, in general, when you look at how technology innovation usually happens, whether you look back at early, mid 90s, really at that time, many of the frameworks that were really being built on for what we now know as the internet were in the same kind of boat, is that many of those types of technologies, many people never believed that they would ever be utilized for anything of real nature or use case. So it has been around, and we've kind of gone through that cycle before.
I think that's basically something that crypto people use to pump their tokens. So they like, they used to say 90% of startups fail, which was also an overestimation. That's also like a little bit high. And that's kind of how VCs justify going for home runs and having so many failures. Now I'm seeing crypto people claiming that 99% of startups fail, to try to analogize what's going on in crypto. But at the end of the day, literally the only companies that make any money in crypto are the ones that facilitate trading. So if you can do the dance of short time to liquidity, and we make our own weather, which are basically the only 2 slides required in any crypto VC's fundraising deck for their LPs. That's kind of what's at play. It's the fact that it's just outside the reach of regulations today. You can say whatever you want. You can promise the world about blockchain technology and crypto, this, that, whatever, and get away with that and have that short time to liquidity where you can pay to list on exchanges. You can use some of your token pile and some of the money that you raise from the crypto VCs to fund market makers to paint the tape and make it pretend like there's some interest and there's some support at different price levels. But you're really doing a bunch of things that are completely illegal in traditional securities because they're not being regulated today. And by the way, I'm not in favor of regulation. What I'm against is hypocrisy. And so, there are people that are very principled and very smart that I hang out with who are, take more of an anarcho-capitalist approach. And they say that if you got rid of the SEC and all regulation, the market would have solutions that arise, and that's totally fine. And then you would have, associations that do research or whatever. And they would say like, this Ponzi scheme over here, and I'm going to rate this one like relatively less risky, whatever. But what's not really okay, I think, as a society is to basically say like, I think if you're anti-regulation for crypto, then you should be, in DC banging the table to remove all regulations for Ponzi schemes targeting your grandma, that you should be in favor of penny stock operators being able to send direct mail to nursing homes, and basically like everything should be all systems go. But if, like Brian Armstrong and Coinbase, you want to build a company that sits on top of the regulatory framework, the trust and experience that regulators and markets have that give us this amazing capital formation that we have in the United States with the best regulated and sort of most productive capital markets in the history of the world. And you want to benefit from that. But then out of the other side of your face, you want to say, but please ignore these unregistered securities on my exchange. And my exchange, by the way, please don't regulate that. And let me just go ahead and say asinine things about the SEC. Which bought my $135 million mansion,